Most people, when they hire us, they're hiring us for our models and our asset management, and they stick with us because of the other side, the communication. In my opinion, and I've been in this business now for a while, people fail to reach their financial goals not because they have Facebook in their portfolio or some stock that blows up. 99 out of 100 times, it's because they made a really bad decision at a really bad time. It's all behavioral.
Welcome, Model FAs. David DeSell here, president of Model FA and the host of the Model FA podcast. Appreciate you all spending some time with me and our guest, Mike, today. Mike was actually an introduction from one of my clients, Brian Malaysia. So Brian, if you're listening to this, appreciate the introduction. This wouldn't happen without that. So thank you. And with that being said, if any of our listeners think that you would be a great guest on our show, or if you know anyone that could be a great guest on our show, feel free to shoot me an email at david@modelfa.com. Always willing to have an introductory phone call. And if it's a fit, we're ready to rock and have you on or have your friend on. And if not, that's totally okay too. We'd still love to connect with you. So without further ado, Mike Sorrentino is the Chief Investment Officer for Darwin Asset Management. He oversees the development and implementation of investment strategies and provides regular thought leadership to both advisors and investors. Prior to Darwin, Mike was the chief investment officer of a firm that oversaw $6 billion in assets and serviced hundreds of financial advisors nationwide. He's also worked on the sell side for many years at Sanford Bernstein and Barclays Capital, where he worked closely with hedge funds and long-only institutional managers that collectively oversaw hundreds of billions in assets. Mike has been a guest on CNBC, Fox Business News, and Bloomberg, and he's been quoted extensively throughout major newspapers and publications. He earned his MBA from the University of Chicago, as well as an undergraduate degree from Vanderbilt University. And he holds the CFA designation as well as Series 65 license. So without further ado, Mike, welcome to the show.
Well, thank you for having me. It's great to be here.
Awesome. So just to help set the stage beyond your bio that I just went through, how'd you actually get started in the industry? Like, were you fresh out of school in the finance industry? Did you do something else and then join the industry? Like, how was that process?
If you asked me when I graduated undergrad if I'd be working in finance, I would have laughed at you. I always found investing to be fascinating, but I got an undergrad with engineering degrees. I went into management consulting and this is during the dot-com craziness back in the late 90s. So I was knee deep in these nascent technologies that were changing the world, and we're running around with our heads cut off. So I was pretty deep in tech for a number of years. I was certified in, I don't know how many software programming languages. And I think I started this consulting firm. It was a small one, it was a boutique. And, we started to get some traction. I realized that I knew nothing about running a business. I couldn't read my P&L. I'd never taken accounting before, all this stuff. So I figured, I'm just going to go to business school and that's going to solve all my problems. That tells you how naive I was at the time. And when I got there, I started taking classes in finance, and where I went at Chicago, it's a finance heavy school. And I started meeting some people that were in the business, and it opened up my eyes to a completely different future. And right then and there, I knew that I was going to make a major career shift. That's really what got me into the business.
Nice. Now, I guess your first role in the business, what was that? And how'd you actually break into that? Was it just typical kind of send in your resume, or was there a connection that opened a door? What did that look like?
Yeah, it's another thing. You think when you graduate with an MBA, you'll have
everyone's going to want you.
They're going to want you from everywhere. It doesn't work that way. At least it didn't for me. I did it the old school way, just sending out resumes, calling up people, getting the door slammed in my face more times than I can count. And there was one firm, you mentioned Sanford Bernstein. At the time, I didn't really even know who they were, but I learned very quickly that they were the best equity research firm in the world. And I say that not just because I'm biased, but because they really do produce the best research. And their thing was bringing in people that didn't have any industry experience, but showed success in other ways. And they would basically train you the business, train you markets, research, all that. So I still to this day don't know how I got through that interview process. But when I got hired, then they put me through called almost a year of training. And it was a psychological boot camp like I've never endured in my life. It was terrible. It was miserable. But I got out of the other side with a toolkit that I still to this day value probably more than anything else I've done in my career.
What was it about, you alluded to a moment ago that, if someone asked you when you were, taking your undergrad, if you'd work in finance, you'd laugh. And then here you are spending the majority of your career now in finance. I guess, you were exposed to it in your MBA, but was there like a particular moment or situation where you said, you know what, like this is what I want to spend the rest of my life doing? Like, what was that catalyst to get you in here and get you excited?
Well, to be completely honest, initially I thought I'd found a business that was actually even better than software. It was infinitely scalable. And look, again, we're all being honest here. I think that most people get in this business because they want to make a lot of money. And I saw that opportunity there. And I figured, okay, if I can get in this business, everybody wants to pick stocks. That's what you want to do. You get this business. Okay, I'm going to become a great stock picker. I'm going to be the next Bill Ackman or something like that. And you start doing it and you realize very quickly that, really isn't for me. And I learned very quickly being an analyst really wasn't my passion, but I enjoyed the business. I loved, the people involved. I mean, they're some very smart, very driven people that you run across. And then I just, like I said, the dynamics of the business I thought to be fascinating. But, like I said, I started on the institutional side and I enjoyed my time on the sell side. I learned a lot, but ultimately I was joked around. I felt like I was Andre Agassi's tennis coach, right? My clients were already so good at what they did that I don't know if I was really providing any value. And I started looking on the other side of the business, the retail side, RIAs, broker dealers, and I saw even more of an opportunity there from the business side to go there and actually do something different and build something. And that's ultimately what made me make that transition a couple of years after being on the sell side.
I had someone, the recording was yesterday, so I don't know exactly when it's going to be released, but her name is Sonia, and she had shared a story that was really cool about how she got hired at this larger broker dealer, and she started off as the CEO's executive assistant. And throughout the years, I forget the time frame exactly, but throughout the years, she became the CEO of that company. And I was like, wow, that's, really cool. So I guess for you, you go and you start through that rigorous, training program that you referenced, and then you became a CIO, and now you're a fractional CIO for, multiple folks. What was that journey like, working from, the bottom, so to speak, in the training program initially to actually feeling as if you have enough experience and credibility and know how to hold yourself out as, that C-level executive?
I would say that while I didn't start off as an executive assistant, that's incredibly impressive. I definitely did not come up to call it the CIO path as a traditional CIO, right? I mean, I wasn't an analyst for all that long. I was a portfolio manager briefly, but your typical path for a CIO is a very structured one. And I came in this business differently. When I went to work for Bernstein, I started on the sales desk. So I was going through this rigorous training program, but it was really to be able to then turn around and sell the research to other portfolio managers and hedge funds. So I was a generalist. I had to learn. They gave me once a week, I had to learn a new sector, and then they would just beat the hell out of me through role plays and questions. And I had to go through all this just terrible, miserable processes, even making my blood boil.
I was going to say, I can see it in you. You're like, oh, David, why are you making me relive this?
It was just totally brutal. But look, it's like any other type of hazing. It works, right? So I came out of it. And like I said, I enjoyed markets. I enjoyed being part of this industry. But ultimately, I knew very quickly that I wasn't going to be a stock picker the rest of my life. So I had to kind of look around for something else to do. And managing portfolios was something that I found interesting for a while, but ultimately I like being part of the business. I like doing more than the analytical work. So as a CIO right now, a good example is I spend maybe about 30% of my week on the portfolios and the strategies. The majority of my time is meeting with new clients, doing things like this, marketing for the firm. And also I do a ton of communication. I do a lot of writing and webinars and public speaking events for clients across the country.
So one thing that you just alluded to, and I think this is extremely important for everyone listening. You mentioned that every week, and this is totally unrelated to CIO, but I can't help myself but to emphasize this portion. You mentioned that you learn something new every week, a different sector. And then, you were asked a bunch of questions, you were role playing, you were just kind of going through that redundancy. But like you said, as painful as that was in the moment, like it really does work. So oftentimes I come across advisors, and some of you may be listening to this episode where, there's, a statement like, hey, I'm not getting as many prospects, as I would like, or I don't feel like I'm connecting well in the discovery meeting, or there's a disconnect in the financial planning presentation portion of your sales process. And I would ask you, when was the last time that you practiced your language? When was the last time you picked it apart? When was the last time you role played it with someone else and got feedback from them? If you're feeling pain in your business, a lot of times it can be addressed by just a focus and an emphasis on that aspect of your process and picking apart your language. So I'm glad you alluded to that, because I think that a lot of people need to hear the fact that, as painful as it may be, it actually works.
One of the best things that I ever learned years ago was what they teach people in medical school. See one, do one, teach one. You see something done, you do it yourself. But most importantly, you turn around and then you teach that concept to somebody else. And that's what really cements things into your brain.
I like that a lot. So now, how do you, is your end client now, is it, the retail investor? Is your end client the advisor? Is it a combination of the two? Help me understand present day, who you tend to work with.
Right. I would definitely say it's the combination of the two. I mean, when we had this idea of Darwin Asset Management, one of the things that we wanted to do was be very specific, create an asset manager that was designed specifically for RIAs and wealth managers. Okay. Because when you think about this industry, the overwhelming majority of money managers out there, when they first put the shingle on, outside their door, their goal was to go after the big fish, right? Go after the institutional money, like pension funds, endowments, or maybe some family offices. And then over time, if they gained success there, they would ultimately swim downstream into into our world, more of the RA and wealth managers. Well, what we wanted to do is we wanted to start there, okay? Because I think what you tend to see here a lot of times is firms that started at the top and moved down. They never adjusted their business and their value proposition to ultimately the wealth managers and their end clients. We started from scratch. We said, no, this is who we want to talk to. We want to talk to advisors. We want to give them the tools and the information and the services that they need. And we also want to be able to connect the end investor to us. We want to make sure that they know who's looking after their money. So it is a very different business model in that perspective. Everything that we do is designed for RIAs.
So what type of RIA is the best fit to work with you? So I think about, one of our service offerings we call Chief Growth Officers. And it's a combination of fractional CMO services, fractional Chief Business Development Officers, really helping head up the strategic, growth vision and implementation for that firm. And those folks, their firms tend to be anywhere from 2 upwards of, 10 billion or so in assets. And a common theme that I've seen, because we have very intimate relationships with those folks, is they have their own internal CIOs where there's plenty of cash flow, there's plenty of assets to justify that role in and of itself. So I don't know, are those folks the types of people that you work with? Is it a different type of advisor that you work with? I guess help me understand the types of advisors in the RIA space that would get the most value in working with someone like you.
Yeah, that's a great question. I would say that anywhere between, on the lower end, maybe 50 million up to maybe 500 million, somewhere in that range. We have some clients that have more than that. But ultimately, what you just said, I think is very important, because let's say you've got 100 or 200 million in assets in your book. It is very difficult to justify bringing asset management in-house. It's too expensive. And a CIO with a CFA is going to cost you a couple $100,000. You've got expenses around Bloomberg terminals, the compliance costs, all of it. It's just not worth it. So what we try to do is we try to step in there and say, okay, look, you've clearly have some traction in your business. You're not quite ready for bringing this in-house. Let us bridge that gap. Let us come in and provide the outsourced CIO offering through not just money management, because asset management in of itself, let's be honest, it's grossly commoditized in many ways. But when you add a service component to that, it becomes a true offering. And that's really what we're trying to look for. Those advisors that need more than just asset management. They need to have proactive communication during times of market panic, or when we trade portfolios, have rationale so they can explain to their clients what's going on in those portfolios, things of that nature.
So you started to scratch the surface right there, and I want to continue going down that path. So with partnering as a CIO, and we talked about this on our intro call, initially I was like, okay, this seems like a fancy way to not reference yourself as a TAMP, but you do similar things that a TAMP would do for an RIA. But from our previous conversation, it seems like the answer is yes, we do operate like that to a certain degree, but we also do X, Y, and Z. Help us understand, like, if I'm an advisor and I'm exploring working with someone like you or working with a TAMP, like, what's your value proposition that differentiates you from, the typical TAMPs out there that, an advisor can partner with?
Yeah, look, we work with TAMPs today, and I think there's a strong value proposition for a lot of TAMPs, but at the same time, I think a lot of TAMPs tend to overpromise on certain areas. And while there might be some overlap between us and the TAMP, I think we take it definitely a step further. So when I think about, let's do a couple of use cases here. So let's say I'm an advisor and, I'm a goals-based advisor and I've got clients coming in and I want to, plan for retirement, whatever it might be. You go to a TAMP and a lot of times it's a Chinese menu offering of investment offerings, right? So it's this huge list of all these different strategies. And a lot of times you can go into analysis paralysis trying to sift through all of that information. So one of the things that we do is, as I mentioned earlier, we created our companies specifically designed for wealth managers and RIAs. So while we might have a quote unquote equity growth strategy or a tactical fixed income strategy, something like that, our offerings are more specific to that goal. We want to be able to manage not just the portfolio, but also the asset allocation for that advisor. So think about it from your perspective. You're an advisor, you've got, let's say, a book of 200 million, and you've got, maybe 30% of your book or 50% of your book are quote unquote moderate investors. As an advisor, the best possible thing you could do is try to manage all of your moderate investors that have the same goal the same way, right? It's all about scaling this business as much as possible. So what we try to do is we try to provide those solutions that are what we call turnkey allocation. As an advisor, I know that if I pick one of our, let's say our evolution moderate strategy, that within that strategy, that my team here is going to manage how much goes into sector rotation or equity growth or whatever the various components of that allocation will be over time. So we handle that. On top of everything else, as we alluded to earlier, we're heavy on the service and communication side. Now, I know a lot of asset managers and TAMPs provide thought leadership, but again, I think a lot of this industry is focused on the institutional side, or that's where they got their start. So they're used to talking to people in a specific way or their customers in a certain way. We don't do that. We create all of our communication pieces specifically designed for advisors to take them, white label them, and then repurpose them out to their clients and do it in a language that they can understand. Everything that we do for our clients, you could be a Stanford PhD, or you could not know the difference between a stock and a bond, and you should still have some understanding of what we're talking about.
Now, if I'm not mistaken, aren't there also situations where you or a member of your team will actually be client facing with that advisor? Or am I misremembering that? How does that work?
Yeah, that's quite regularly, actually. So, a couple things there. From our perspective, we wanted to build a scalable service model. I don't want advisors coming to us. We don't want clients coming to us because they think we're going to outperform all the time. Mm-hmm. You live and die by performance in this business. You're going to die because everybody underperforms at some point. We're going to at some point. That's how the business works. So our value proposition is more along the lines of how do we provide a service to the client, meaning the advisor and the investor. And one of those is, from the advisor standpoint, is we tie ourselves into the organization. We're almost kind of an in-source solution. I do a couple calls a week with advisors who are trying to close high net worth individuals. Like I said, I've got a sales background, and I work very closely with the advisors to help them bring in new business. They're having difficult conversations during reviews. Myself or somebody in my team is happy to join that. Before COVID, I was flying across the country, 3 or 4 times a month and doing presentations at client events for our advisors, talking about markets, not selling, but just talking about markets and what's going on and why we see opportunity. And again, giving them that connection of who's looking after their money. Seeing these people in person, I think it carries a lot of value with advisors.
Well, it's cool to hear that, because I feel like if an advisor is in a position to want to offload their asset management, typically it's because they want to spend more of their time building relationships, developing more business, and ultimately, increasing revenue, of course. And sometimes those are the only reasons. And other times it's because they don't actually know the markets as well as someone who spends their entire day, researching, looking, and analyzing what's going on. So it's cool to be able to leverage, your team and your time to come in and Like that's a big deal. Like a lot of the firms that we work with that I mentioned earlier, they're hopping on those sales calls as well. And that advisor can edify the hell out of them and really put them up on a pedestal. And it seems as if, they're able to leverage you in that same way. And, that's whatever the fee is, to be able to work with you, you're incentivized to help close that business.
Well, look, I don't need to tell you this. The most valuable asset of any advisor is their time. And I'm also a data junkie. If you go and you look at quote unquote elite advisors versus average advisors, I'm sure you know this, but if you look at what elite advisors do better, they spend their time on client service, client acquisition, employee training, practice management. In your world, the average advisors spend more time on things like portfolio management, research, stuff like that. And that, in my opinion, is almost a waste of time. I mean, look, I've got a team here of we've got PhDs, we've got quantitative investors, we've got a bunch of people that wake up at 5 a.m. and we work all day doing this stuff. To do that and then to have to meet with clients at the same time, you're going to spread yourself too thin. So if you're not ready to bring this in-house, but at the same time you want to offer an institutional service to your clients, we are a great fit for that type of an advisor.
Hey, Model FAs. I know you're enjoying this conversation, but I wanted to take a quick break to talk to you about the Model FA Accelerator. This is a unique collaboration between us and you, where we help you build a financial advising practice that you can be proud of. We focus on the foundational concepts around how to pick a niche or a specialization, how to price your services, how to construct an offer that people are going to buy, and then how to market it and sell it in a way that'll get people to sign on the dotted line and become clients of your firm, all while giving you the information to scale and set up workflows and operational processes that will allow you to reclaim your time and build a practice that doesn't run you. So if you'd like to hear more about that, go to www.modelfa.com/accelerator or www.modelfa.com. Hover over Work With Us and click on Accelerator. Hope to see you in the program.
Outside of an advisor just simply, like let's say, for example, there's a $2 billion firm and they have plenty of cash flow to be able to hire a CIO internally. Is that the answer 10 out of 10 times? Or, is there ever a reason why they may still want to, leverage someone like you in a fractional sense? Again, if money's not an issue either way, like how do you think through that?
I think asset management, again, this is an industry that is grossly commoditized. So if you want to bring something in-house, the question is, do you want to bring a commoditized product in-house? Or do you want to build something that's differentiated? Building something that is differentiated is going to take way more than a CFA or a CIO or a Bloomberg terminal. It's going to require an entire business, right? You got to think about the story side of it, the marketing, the branding, the colors, the fonts, how everything ties together. So we deal with a lot of our clients, our advisors that could very easily afford to bring this thing in-house, but they look at the differentiation that we brought to the table. Everything from the brochures and the marketing materials that we do to the story that we give to their advisors. Because again, if you're sitting in front of clients and they're hearing the same story from 8 different places, you're now a commodity. But if you tell them something different, something they haven't heard before, and provide a solution that isn't available everywhere else, now you got something special.
Well, I hadn't actually thought about it that way, how it's an entirely different business. That's an interesting perspective that, like right off the bat, I agree with. Like you don't think about the fact that there's the marketing and the communication portion of it as well. I also really like how, when you think about, and I'm being very general and assumptive here, but when you think about, a typical sort of CIO, CFA type of person, they're not always the best in front of clients. They're the best behind the computer. So the fact that you have the sales background as well to be able to help them actually close the business is really, really cool, in my opinion. What are you seeing? And I know that, from a compliance perspective, we got to, make sure that we're not going too far down the rabbit hole, but we're recording this on February 11th, 2022. The inflationary numbers, just came out talking about rate hikes and things like that. What's your general vision or forecast of what's to come moving forward with the markets in general?
So I don't believe the markets run on calendars, but it just so happens that the beginning of this year coincided with a lot of big changes that are going on in the economy and financial markets. And one of the things we've been telling our clients is to reset your expectations. And I was joking around a year ago, telling anybody that would listen that I had the easiest job on the planet, because the Fed basically was going to say, look, we're not going to let anything fall apart. And if you invest, you're probably going to make some money. This year, it's a different story. Economic growth is slower than it was a year ago. It's definitely looks a lot different. And we've got inflation, the highest inflation rate we've seen in 40 years. So that means that the overwhelming majority of investors right now, we're not investing the last time we had inflation this high. So there's a lot of uncertainty there. Now we've got interest rates rising very soon. And I think of all that and I say, okay, this is going to likely create a fair amount of volatility going forward. And I use the analogy of injuring your legs. So let's say you're in crutches, okay? What happens when you take off the crutches, if anybody that's hurt their knees before, their ankles, is you tend to be a little wobbly for the first couple of days or couple of weeks. But ultimately you get stronger, you learn to walk on your own, and it's not a big deal. Well, the Fed, in the way they've acted over the last 2 years, they put crutches on the economy. All right. And it's the same thing after the financial crisis back in 2008. They put crutches on the economy. And when they take those crutches off, we have to expect a little bit of volatility and a little bit of wobbling, and we'll probably fall down once or twice. So I think that's what we're going through right now, is that adjustment to the fact that the Fed is no longer going to be manipulating the markets like it's been doing for the past 2 years. So when I think about inflation, I think that it is something that is a challenge right now for investors, but it's a solvable problem. All right. Particularly if you invest in equities, there are great hedges against inflation in many instances. And when I think about the opportunity, this is the more important thing. Philosophically, I'm much more of a longer term investor. The opportunity right now facing investors is like nothing we have seen before in my career. The challenge is getting there requires a far more sophisticated approach than in the past. I mean, if you're going to tell me you're going to bring a 60-40 playbook or anything you learned in your MBA classes and apply it to this market, you're bringing a knife to a gunfight.
So I want to take what you just said and apply it back to something that you said earlier, where, you were good with not saying like, things are going to go this way or that way. It's just going to be volatile. And earlier you said, if you live and die by performance, you're going to die because, everyone will underperform the market at some point, in their career. How do you, as an advisor, how do you balance the communication of the markets with your clients without overshadowing the larger value proposition that you want them to experience with the planning and the experience of having an advisor and things like that? Like, is there like a certain cadence? Is it being proactive versus reactive? Like, how do you make sure that you're not always putting a magnifying glass in front of your clients as it relates to the market performance?
Yeah, that's a great question. Most people, when they hire us, they're hiring us for our models and our asset management, and they stick with us because of the other side, the communication. In my opinion, and I've been in this business now for a while, people fail to reach their financial goals, not because they have Facebook in their portfolio or some stock that blows up. 99 out of 100 times, it's because they made a really bad decision at a really bad time. It's all behavioral. And that's the reason why the communication piece is so critically important, and how you communicate that. And you bring up a very good question. It's like, you don't want to put a microscope on the market, but at the same time, you want to still be proactive, right? I mean, making a phone call and taking a phone call are two very, very different things from an advisor standpoint. So what we try to do as best as possible is to use data and to use real world examples in our writings and our communication pieces to make sure that people keep their head on straight. And look, there's a lot of academic research out there that shows that our clients will never learn. It's human nature. So we got to be continually communicating the same thing over and over again. A lot of times I'll take a subject and I'll send out a weekly note on it 6 different ways. It's the same thing. It's the same theme, but I'm showing 6 different flavors, if nothing more than just to do our best to keep our clients' mindset where it needs to be. That's way more important sometimes than where their portfolios are positioned.
Yeah, I think it's better too when you keep it general and kind of theme based, while also mixing in, some timeliness along the way. It's much better to hear that proactively from your advisor than, seeing a headline or a segment on the news or chit-chatting with their peers and, then having to reach out to you, and then you're kind of on defense mode, in that situation. So I guess it's, the idea of make sure that they hear some of this stuff from you first so that they feel like you're actually being proactive and you're on top of this stuff. Yeah.
And it goes back to time, right? That's hard to do. So what we try to do here is, I'll give you an example. When the yield curve inverted, I think it was like in August of 2019, something like that. At 8 a.m., all of our clients had talking points ready to go. And it was very clear. Here are the 3 things you should be telling your clients right now. Get on the phones. Don't wait for phone calls. The market's probably going to take this the wrong way. And it worked. And if you do things like that, then what you're going to find is during times of volatility going forward, those calls coming into your office are going to become fewer and fewer and fewer. And today, even though the volatility we've seen so far this year, some of our established clients and relationships, we haven't had a single call yet.
I think about a couple of clients of mine, John and Matt, in the Orlando area of Florida, and they're big on, written content, video content, things like that. And they have a mix of financial planning related topics, market-based topics, personal development topics, other things that they're passionate about. And they're just really good at, content marketing and branding. And I was chatting with them earlier this week, and they mentioned how they have videos like ready to go that are general enough in nature that are meant to be shared, posted, and distributed in times of uncertainty. And it seems like when you combine some of that general stuff like they have with some of the timely and perhaps more specific material that you have, you're just getting out in front of it. And they've even said that since they started doing this over the last couple of years, their phone calls from clients that were once always questioning and skeptical and worried about uncertainty have decreased drastically because of the communication. So I really like that you guys are providing talking points, for the advisors that you're serving. I think that's very helpful because some advisors can be like, how do I handle this?
Yep.
So
we have a repository of coaching videos as well. Again, we're always going to have that gold bug come into our office. You think the world's ending and gold's the savior and all that. So here's a 90-second video on how to address the gold bug. Here's a 90-second video how to address somebody who has come across one of these fear-mongering websites, things of that nature. And they're very direct talking points to, like I said, it's more of a coach than it is a regurgitation type offering.
For sure. Well, this has been super helpful and insightful for me, and I'm sure for the folks listening as well. And if nothing else, and I'm grossly simplifying this, if you're an advisor, at that $50 million mark, $100 million mark, or above, and you don't have a CIO, or your business has the makeup of you as the advisor, perhaps a staff person or two, maybe even a lead advisor, depending on your size. If nothing else, it's kind of cool to say you have a CIO, even though it's in a fractional sense. Your clients, don't necessarily know that. So obviously the value proposition is much bigger than that, but it's still cool to be able to add an individual, to the bench. Because if you say, that you have a TAMP, your clients don't necessarily know what that means. But when you say you have a CIO, that tends to resonate with them a little bit more. So before we wrap up here, Mike, and for those of you who may be listening to this podcast for the first time, or our show for the first time, I should say, one of the things I always ask our guests, because I want to help distill this for you and me, quite frankly, is what one of their favorite books is and why they chose that and the impact that it's had on them. So I may butcher the last name here, but we tried to come up with it before we clicked record. But it's a book called Influence by Robert Cialdini. Why'd you pick that?
So let's go back to how I got into this business. So I was very analytical, very process driven. I thought I was going to kill it in investing because I felt like there had to be a formula, right? A set process, like markets are run on Newtonian physics or something like that. And I just got wrecked the first couple of years because I just couldn't understand why things didn't work to plan. And it's because markets, they don't operate on Newtonian physics. It's, we called our company Darwin for a reason. Markets are accountable to Darwin. It's human behavior that drives markets. And if you want to become a really good investor, if you want to not panic during times of extreme volatility, all these different things that'll make you successful, spend way more time studying psychology and human behavior than trying to figure out how to do DCF in an Excel spreadsheet. Okay. That's going to separate you from the rest. And Influence chronicles a number of different behavioral biases that we come across that haven't changed for hundreds of years. And it's an insight into the fact that if you can spot some of these biases, or if you can see where the tide's going, where the herd's heading, that will give you insight into being able to position yourself to avoid some of the mistakes that the herd makes. And hopefully, from a contrarian perspective, profit from their demise in many times.
Love it. I haven't read that book yet, but I'll add it to my list and looking forward to it. So I appreciate that insight. So if I'm listening to this show and I'm thinking to myself, Man, it would be cool to have a CIO in my business. I may not be able to afford it right now or necessarily know how to build that out. Or perhaps, I just want to get asset management off my plate and, I'm considering options outside of, the typical TAMP that's out there and available. Where do people find you? How do they check you out? How do they explore, kind of what it's like to partner with you guys?
Yeah, the best way to do that would be to go to our website, www.investwithdarwin.com, all one word.
investwithdarwin.com. Awesome. So for all of you who are listening, this was insightful for me. Hopefully it was insightful for you as well. And with that being said, if you found some value in today's show and it was insightful for you, go ahead and click share and share this with another advisor that you know. We found out recently, I've been saying this in the last few episodes, but I found this out recently that we're actually ranked in the top 2.5% of all podcasts globally, which is a result of all of our fantastic guests like Mike, as well as all of your advocacy, support, sharing, reviews, all that type of stuff. So we wouldn't be ranked that high without all of you. So I appreciate your attention. I appreciate your time. Mike alluded to this earlier. Time is the most important for advisors and obviously people in general. And the fact that you're choosing to spend your time with myself and the guests that we have on is greatly appreciated. So also, if you don't mind popping onto iTunes and just shooting us a quick review, we'd really appreciate that as well. And if you do so, take a screenshot of that once it's posted and shoot me a text with that at 978-228-2338. You'll get an automatic reply with a link to enter in your first and last name. And then once you do that, it'll be added to my contacts. And then it's actually me who's texting you back and forth. So if you screenshot that and just put in Mike Sorrentino, Sorrentino, I'll go ahead and give you access to our Model FA Accelerator program, which is all of our digital content around business development, relationship building, mindset oriented stuff, sales principles. As a thank you for taking the time to write a review. I'd be happy to share that with you. So with that, Mike, I appreciate your time. Brian, if you're still listening, appreciate you connecting us. And I know this won't be the last time we chat. So looking forward to building the relationship and perhaps collaborating at some point down the road.